Gold is in a bull market in every currency except for the US dollar. So gold has been doing well this year in US dollars. Over the last 6 months, it's up almost 9%. Over the last year, it's up 11.35% according to goldprice.org, which tracks the gold price in a lot of different currencies. However, the gold price has gotten smashed lately, and the commitment of traders does not look short-term bullish for gold. So the gold price is back down either at $1,400 or a little bit below $1,400 an ounce, depending upon which website one is checking right now when this audio is being recorded on Saturday night, July 6, 2019. Now, I have up this chart, which is the gold price versus the GMI currency basket. And if you're not familiar with what the GMI currency basket is, it's something that hedge fund manager and Real Vision TV co-founder Raoul Pal checks a lot. It is a multi-currency basket of over 27 currencies. Normally, it's equally weighted when you're measuring the currency basket against the dollar or against gold. And if you look at this chart of gold price versus the GMI currency basket, you can see that really the gold bull market in every currency but the dollar, so 27 currencies or more, really the gold price bottomed in 2013 and 2014, and 2015 and 16, it started to really take off, and it's making higher lows here on this chart, and it's really breaking out. However, against the dollar, that is another story. So the gold price did break above key overhead resistance levels in the last couple months in the 1350, 1360 range. I know there were people who listened to this channel who are technical traders who are saying that that wouldn't happen, and it did. So it was kind of due for somewhat of a correction. Maybe on the short-term indicators, it would have been somewhat overbought. And with the commitment of traders data, you have the hedge funds, the short-term momentum guys starting to get long gold now, which is normally not good in the short term for the gold price in dollars. But the gold price in dollars in general has lagged the bull market in gold in pretty much every other major currency. And a lot of that, unfortunately, has to do with the well-documented history of gold price manipulation. Now, a lot of people will argue with me on this, but they have not done their research. The best place to find all of this is the Gold Antitrust Action Committee, or GATA.org website. Chris Powell and Bill Murphy and the rest of their team over there do an excellent job on very limited resources, and they track all of this stuff. They've tried to sue the federal government. They've tried to sue the Federal Reserve to get more information about gold. And also, if you go and look up on Wikipedia, there's well-documented evidence on Wikipedia of the London gold pool in the 1960s. And the London gold pool is clear signs that the US government, the British government, and other major governments were in cahoots for a long time to try to manipulate and cap the gold price. Now, eventually the London gold pool broke, and Charles de Gaulle and Jacques Rueff in France, they started to demand their physical gold from the US. But during the 1960s with the London gold pool, there was an attempt to sell a lot of physical gold to manipulate the gold price. And the manipulation that we have now is a lot more sophisticated. There's a lot more paper gold out there, but it is pretty much the same principle to try to cap the gold price. So there's a concerted effort, in my opinion, to cap the gold price in US dollars. Eventually, it's not going to fully work, because at some point, if they keep smashing the gold price down, the primary gold miners will either have to drastically reduce the amount of their gold production, or they will go bankrupt. And we're already seeing large signs of that now with silver, which is even more manipulated than gold. The silver market has even more paper silver. The silver miners have even worse balance sheets than gold miners. A lot of primary gold miners have better margins right now than primary silver miners. Things are truly dire for a lot of primary silver miners. And that's why a lot of primary silver miners for the last 5 years have been basically lying to their shareholders about the cost of production, and then also buying gold mines, even though a lot of their shareholders want them to exposure to silver. But the honest to God truth is that most primary silver miners cannot make a margin mining silver at the current price. So the gold price has struggled to stay above 1420. It's probably going to take some more time to do that unless there's something in the news. The other major overhead resistance levels for the gold price to watch that would confirm that the bull market for gold is indeed restarting rapidly is at the 1425, if it can hold that level, and then also 1450. And then you have other overhead resistance levels in the low 50 at 1500, 1525, etc. So it's going to be a fight to get back up above there unless there is certain news stories. And these news stories have to do, I think, with what's going to trigger the gold price moving higher. And we already saw examples of this just in the last couple months. And that was comments from the Federal Reserve about rate cuts and then also quantitative easing. Now, this is a major tailwind, a major bullish central bank global macro piece of news for gold in general in all currencies is that now there's $13 trillion and growing. Remember, I did a video in the last couple of weeks with a chart showing that the chart is basically starting to go parabolic of negative yielding debt globally. Now, a lot of that debt right now is in the European Union and Japan for corporate bonds and government bonds. But as the US is trapped in Japanification and the increasing likelihood of zero interest rate policy or ZIRP, and maybe even negative interest rate policy or NIRP in the US, that means that people are not going to get paid a yield in bonds to not hold gold. So this would be an incentive then to hold gold. So the lower these interest rates are manipulated, and you're already seeing this in Europe, you're already seeing this in Japan, there used to be, for some professional money managers and other people, a disincentive to hold gold because you are getting paid a yield, somewhat safer yield, to not hold gold. Well, that yield is vanishing. It's evaporating. It will be gone probably over the next couple years as there's more, trillions and trillions more in negative yielding debt. And the global Japanification, the global stagflate and tax and lie paradigm from these Keynesian central bankers and neo-Keynesian central bankers, this should be bullish for gold. Now, obviously, there's a lot of manipulation in the gold price, especially in US dollars, because the gold price in a lot of other currencies is breaking out. There doesn't seem to be nearly as much manipulation in the other currencies, but eventually that manipulation, it will mean either if the manipulators continue this, there's a law of diminishing returns. So just in the last 3.5 years, guys, there's been more than 3 large investment banks fined for paper price manipulation in gold and silver, either in London markets or in the US. And in the last year, we had a manager in the JP Morgan commodities trader department admit under oath that his bosses told him and taught him that it was easy to manipulate paper gold and silver prices. So unfortunately, a lot of these fines are not very much. The return on investment for manipulation is very, very good for these investment banks to manipulate gold and silver. But what is happening is there are going to be supply issues because the miners do not have good margins, do not have good free cash flow to reinvest back into their mines to either find new exploration or to increase production. It's just not there. And there's not, for a lot of miners, even producing miners, there's not a lot of equity available. And that's why a lot of these miners have problems with their balance sheets. And a lot of juniors then don't have money for drilling, which is why juniors are going to joint venture deals with producing miners, small ones, so they can drill a little bit, some of them, or they're going to the 5 largest royalty and streaming companies. Unfortunately, the fines that the regulators have given to the investment banks manipulating is nowhere near enough. None of these bankers are going to jail. So they've made many billions of dollars in profits from manipulating gold and silver and only paid like tens of millions of dollars in fines. It's not even to the $1 billion level. So it's a very high, unfortunately, return on investment for the manipulation. And hopefully one day this will end. But there are limits to the manipulation. They cannot manipulate the gold price to $1,000 or less because basically it would bankrupt all the primary gold miners. They cannot manipulate silver back down to $12 or less because it would bankrupt all the primary silver miners. Now, maybe temporarily for a short period of time, there would be some above ground silver to satiate some needs, or there would be silver byproducts, but not having that extra 20 to 30% annual supply of the total silver market from primary silver miners would hurt very much the bullion banks, which are fighting a war on 2 fronts, especially in the silver market. And the war on 2 fronts is they fight in the paper markets for the paper price manipulation, and then they also The other part of the manipulation is how so much silver byproduct is available from the copper and other base metal miners. And that could be in jeopardy too if the base metal prices also don't rally. So to wrap things up here on this short video with this chart, the key takeaways here are that the gold price is in a bull market in basically every other currency but the US dollar. And eventually that will happen as more and more rate cuts occur. The Fed panics due to the corporate bond market or the junk bond market, or the US federal government needs to borrow more and more and cannot afford higher interest rates. And that should be tailwind for gold. Now, it doesn't guarantee that we're going to see $2,000 an ounce gold in a short period of time, but we're going to eventually get to those levels because the people in power, the economic and political elites, are going to basically continue what they're doing with financial repression, manipulating interest rates, loading up on government debt, and then trying to monetize the debt with cheaper and cheaper fiat currency, keep asset prices too high, or eventually what they will do then, and this was proposed by Ben Bernanke supposedly in 2008-9, is maybe issue zero coupon bonds and just inflate away the value of the debt. And most people won't even know. Maybe even force people in their retirement accounts to buy US government debt, a small amount at first and then increase it. Okay, guys, well, that's it for this short video. But the bottom line is that the gold price has had a temporary setback, although it has had a big rally in the last year. It's up over 11%. And we'll see what happens in the short term. But the miners are going to have to raise capital in the next 6 months, some of them sooner than that. So if there is a rally in the gold price, I think people should definitely pay attention to that, because it's going to be a fight for gold to stay above 1,400 in the short term, to get to 1,425 and stay above there, to get to 1,450 and 1,500. It's not going to happen too quickly. It is good that gold blew through the overhead resistance levels in the 1,350, 1,360 range, but it looks now like it's going to backtest the prior overhead resistance levels as new support maybe, and gap and fill. And then eventually it will have to go higher because, like I said, a lot of these global macro things that are happening with all these different governments are all positive tailwinds now for gold. Please like this video, share it with friends and family, and don't forget to subscribe to the Wall Street for Main Street YouTube channel if you have not already done so. Thanks for helping Wall Street for Main Street pass the 20,000 YouTube channel subscriber milestone despite YouTube censorship. Hopefully, we'll be able to get to 30,000 or even 40,000 YouTube channel subscribers quickly if YouTube doesn't shut down this channel. If YouTube does shut down this channel, remember to also sign up for the Wall Street for Main Street email list that's on the wallstreetformainstreet.com website and will tell you where the videos are going to be uploaded instead of YouTube. Also, if you really like the content and you decide that you want to give a one-time donation, you can go to wallstreetformainstreet.com. That's wallstreetformainst.com website, where there's different options for you to do so. Or you can become a Patreon contributor. Thanks for listening, and I look forward to providing my loyal listeners with some of the best information, analysis, and financial education available out there, free or paid, as I work to grow the podcast and also get my educational technology company funded.